Hi everybody, Tim Knight here, Slope of Hope. First I want to remind everybody how important it is to have a properly functioning mouse and a properly functioning browser on your computer for effective trading, and to test them both, you might want to click on some of those ads on the right side of the blog just to make sure your mouse and your browser are in good working order. Thanks for that. Now, on to the markets. So I showed this euro-dollar chart a couple of days ago, a day or two ago. People are kind of funny because when something's really strong, they eventually figure it's going to go up forever, like, say, Apple and Netflix, things like that, or the euro. And when things are going down, they figure it'll go down forever. Now, sometimes that's true, like with Blockbuster, but in other cases, like with, say, Apple back in 1997, trends do reverse. And with the euro, June, July, August, September, it's generally been pretty strong, and the dollar has certainly been very weak, and people assume that trend was just going to last because people tend to have a memory of about 4 or 5 days, it seems. But my view was that the price of the euro relative to the US dollar was approaching this very important 50% fan line. This line back in 08-09 represented an extremely important bounce point to the upside. So back in November 08 and back in March 09, both of which were pretty big turning points in the equity markets, the euro rallied hard off of this line. But the role of this line has changed so that now, instead of being support, as it was here, it's resistance. It acted as resistance here, and I believe it's acting as resistance again here. In addition, I drew this Fibonacci retracement from the peak back in November 09 down to the bottom of June 2010, and we also have another 50% level, both of which converge quite nicely round about where we are right now. So what I'm saying with all this is that I think the euro ain't going up anymore. And that means a lot of things. It means the dollar is going up, gold's going down, silver's going down, equities are going down. For how long, it remains to be seen. As I've pointed out emphatically, having gone through 3 big instances of my shorts profits evaporating away with a big market reversal, really not wanting to go through that again. Those 3 instances specifically were February and July early, and then most recently, very early in this cursed month. Not going to let that happen again. Now here's my concern, and mark my words, this is probably what's going to happen. I do think the market will soften up and could get as low as, let's say, 1050 or so. And at that point, I imagine the technical indicators that I pointed out will point toward a reversal again to the upside, because this is like a sine wave. I mean, things have been cycling up and down for so long that everything seems like it'll just continue that way forever. My dread fear, and this fear will probably be realized, but is that, somewhere around here in October, we'll get back down to that 1050-ish, 1040-ish zone, and I will have learned my lesson. I will cover everything, and then the market will collapse down to 925. You'll see a very unhappy Tim if that happens. But what I also don't want to happen, I'm not trying to be cute here, but I do kind of mean what I just said. What I don't want to see happen is for things to get down here and we say, well, I bet it's going to break this time, and it bounces up again. 3 times is enough. Thanks a lot. So since we cannot know the future and only know probabilities, the probability when we get to this level is that it will, for the 379th time, go up again to around 1150. And we'll continue doing this till the end of our lives. Until this rectangle's busted. It's been a long time. Now, thumbing through the index charts just a bit, The strength today was really concentrated in the NASDAQ. Now, when I came into this morning, I had a ton of shorts and one big SPY long. And I really, really, really resented having that long, but I couldn't fail to have that long because I was much too concerned about some kind of bust up, sailing above this much cited inverted head and shoulders pattern. I could not be at ease with a pure short portfolio, knowing that this thing, I might wake up and this thing might be sailing 117, 118, 119, 120. So the bad news is that one long position took a 25% bite out of what would have been today's profit tally. So it was a profitable day to be sure, but I paid a tax of about 25% thanks to that blasted SPY long. But the good news, and I want to be very clear about this, is that the inverted head and shoulders is dead. It's dead. The pattern's been violated. It doesn't mean that under no circumstances will the market rise. What it does mean is that the pattern is failed. It failed today. And so I do not have a hedge now because I don't feel inclined to or compelled to. I don't see it as a requirement, whereas yesterday I very much saw it as a requirement because the head and shoulders was poised for a potential blast higher. So I am utterly short at this point. Anyway, as I was saying, all the strength was located in the NASDAQ. If we look at the NDX, it was basically unchanged. It was down 0.03%. Just call it a flat session. That was well off the strength it saw earlier. Of course, the usual suspects are to blame. Apple, which is over $250 billion of a company now. Who would have thought back in 1997 when this thing was, when there was serious talk about dissolving the company, who would have ever thought Apple would be worth more than Microsoft? By the same token, who would have ever thought that Mark Zuckerberg would be worth more than Steve Jobs? But that is the case, believe it or not. 26-year-old kid worth more than Steve Jobs. Who would have thought? Netflix isn't exactly a big component of the NASDAQ, but this is the real widowmaker. There's a few stocks out there that just have just death to bears written all over them. I don't monkey around with this kind of thing. I think I saw somewhere on the comment section like 37% of the float is short interest or something like that. If that's true, I mean, God help those poor shorts getting squeezed out of this thing. It'll be really interesting once they're finally fully squoze, because this is, I mean, this was like a $2 stock, and not that long ago it was a $20 stock, and now it's approaching, it's 160 plus at this point. Just phenomenal. I don't touch it. No way, on the long or the short side. This kind of thing is all momentum and all danger. Not interested. No thanks. Anything else cool going on out there as I'm buzzing through these? Precious metals weakened somewhat today. This is kind of a push me, pull you situation. The precious metals, on the one hand, are at the cusp of breaking to lifetime highs here, and on the other hand, have run up so quickly and so firmly that one really wonders how vulnerable they might be. I'm not trading these as much as I normally do. They're kind of in a weird no man's land right now. Even our man Gary Savage, I think, is saying, take it a little bit easy. Don't press leverage and so forth. Still very much a precious metals bull, but telling people to just cool it for a little bit. He'd like to see a bit of a sell-off, and I'm inclined to agree with that. Anyway, tomorrow, last day of the week. That's not really the quote, is it? No, it can't be. It's probably just leftovers from today. Anyway, that's it from me. We've got a big economic report coming out in the morning. See if that shakes things up a bit. But past 3 days have been good ones. Let's see if we can make it a fourth. Good night, everybody.